Welcome back, everybody. I hope you had a great break and you enjoyed the videos that we played. My name is Roberta Evangelista. I'm a senior digitalization specialist at BASE, and today it's my pleasure to host and moderate this session titled Data is Collateral, Using Crops and Cold Room Data for Credit Access and Risk Management. In the first part of the summit, we looked at feasibility assessment, cold room design, and financing and business model, which are the foundation to make cold rooms a viable solution. And now, in the second part of the summit, let's start with this session, we are going to dive deeper into how data and digitalization can help to support farmers, make sure that community owns the cold room solutions that we are installing, and also making sure that we can connect actors across the value chain. If you're already familiar with your virtual cold chain assistant project, or maybe you have attended the opening remarks, you already know that data and digitalization are a key pillar of our initiative. And this is because we are convinced that by making cold room solutions traceable and transparent using digital technology, both the farmers that are using the cold room as well as the companies that are offering cooling can benefit. Despite the encouraging results that we have experienced throughout this project and the positive feedback that we have received, we do understand that there are still challenges that remain. And the key challenge that we want to address in this session is the fact that it's still quite challenging for businesses and farmers across the cold chain spectrum and also beyond to show their creditworthiness and access credit. And so what we would like to do in this session is really to learn from how other organizations are actually dealing with this problem and to explore interesting solutions, relevant solutions that can allow farmers to more easily get access to credit, as well as micro SMEs that might be working in the agri or agri-cooling space. And in particular, we'd like to learn from these experiences and try to understand to what extent they could be applied to the use case of cold storage for perishable crops. So to discuss this topic, I would like now to invite on stage the three speakers that are going to join me for this session so that I can briefly introduce them. Great. The first speaker that is going to be with us is Peter Tomatikuri. He's the CEO at our solution. Next, we are going to have on stage Christian Bain, the co-founder of Venture Collateral. Finally, the last speaker to come on stage is going to be Yuomo Obinamvozo, who's the head of the Finance and Business Advisory Unit at NIRSAL, which is the Nigeria Incentive-Based Risk-Sharing System for Agricultural Lending. Without further ado, I'd like to introduce our first speaker, Peter, to give his presentation. And before we actually move on, I'd like to remind all attendees to use the Q&A function to submit your questions. We are going to address as many questions as possible during the Q&A session after the three presentations have been completed. And so Peter will give us an introduction about digital solution and challenges that farmers generally face when trying to access credit. And also he will showcase a specific application, which is AgriWallet, that he has found being particularly useful to deal with these challenges. Please, Peter, the stage is yours.
Thank you so much, Roberta. I hope everyone can hear me. Indeed, yes, this is really great. And as Roberta, you have mentioned, before I talk about our solution, AgriWallet 2.0, let me mention briefly about the challenges farmers face when assessing their credit. And we have observed this for many years across Sub-Saharan Africa. There is quite a lot of resemblance of these challenges. And we have really come up with the key barriers that all these farmers in their own ecosystem and uniqueness face when assessing finance. The common one here that cuts across is the lack of collateral. As you already know, most of the smallholder farmers in this region lack land titles or assets that are recognized by lenders. And then apart from that, they face other challenges like limited financial accounts that really, without them, they cannot be able to, learn lenders, learn their credit histories. And then the financial institutions or the lenders in this region, because of these challenges, they perceive them as really quite a high risk. Yeah, together with agriculture volatility and the small loan sizes that really are not having any commercial, sometimes make sense, then bar them from receiving, the financing. There is a lot of information gap that lenders really find in this region, especially the accurate yield, the price, and the production data that enable them to assess the credit worthiness of every smallholder farmer. The low digital literacy is another area that cuts across this region, where with the digital tools that are there, then adoption is not really very significant. And we face a lot of other weak infrastructure, particularly, that comes with the, energy like power disruptions that either the consistency of the digital engagement. And when you look at different value chains, there is also a bigger challenge of seasonal cash flows. That irregular incomes then complicate, particularly when it comes, to repayment planning for the lenders. And then the way they are organized creates a lot of mistrust in institutions. And then this historically, as a negative experience, reduce confidence in the financial, service providers. And then looking at that from that angle, let us look at what has really been done, especially in this region, and some of the digital solutions in operation. We have seen these solutions trying to bridge the farmers, accessing finance, that gap that already is existing. And this development comes with many, such a kind of solutions like the e-voucher systems, and especially with some organizations like One Acre Fund and other government programs that through the digital vouchers, they are able to secure and track input purchase. We have quite many mobile money and wallets already out here in the field, in the region, that platforms like in Kenya, the M-Pesa and the DigiFarm that facilitate payments and savings and credit directly via phone. We have other solutions like digital credit scoring, like a Farm Drive, if some of the audience here are familiar with it, and Apollo Agriculture that use farm and phone and satellite data for risk profiling. And then we have the supply chain financing systems such as Trigger funds and the high procure embedded credit into delivery procurement chains. We have integration of insurance providers like Pula and Hake Africa that combine insurance with finance to protect against climate and the pest risks. Then other solutions include data-driven cooperative platforms that really enhance transparency and assess collective financing. And then we have also AgriWallet 2.0, which is an evolution of AgriWallet 1. And essentially, AgriWallet 1 was not so much different from these other kind of digital solutions, because entirely it was focused on mobile wallets and the basic financial flow digitization. But now, AgriWallet 2 comes in quite handy with quite enhanced features that are core, transactions, especially trying to influence deliveries, payments, and communication when it comes to digital communication using the SMS alerts. It's able to do the farmer registration based on the GPS, and both for crop and livestock farmers. Then it captures all that kind of the details. It also has another feature that is very critical for inputs and e-voucher management. And again, Angry Wallet 2 provides credit advances with checkoff of recovery, and then it is now integrating the cold chain through delivery and storage data. Again, it has a compliance with some of the global, regulations, like the European Union on deforestation. And then when you look now at the Angry Wallet as another, solution, it is just a wallet. It's a value chain, platform that captures every transaction, enabling traceability and then trust and enhances financial inclusion. Let's look more about, the entire value chain and really with the integrated digital ecosystem of a tool like Angry Wallet that is able to provide these features on registering farmers using GPS and crop and personal details, and then enabling storage integration into delivery and payment records, and providing opportunities for buyers and cooperatives, farmers organized in cooperatives, and input providers digitally when all of them they are linked and how they benefit from such a tool. So we see e-vouchers and checkoffs reduce cash dependency and the risk. But not only that, by turning this kind of data into signals of productivity and reliability, then it gives lenders and cooperatives the confidence to offer credit without the traditional paperwork. How do we then integrate these data to unlock credit and to manage, the risk? And essentially turning agri data into finance and protection, then we see the uniqueness of Agri Wallet 2 in provisioning of credit scoring based on a number of areas. One is delivery of weight and consistency, storage usage, and product quality. Then tagging that information through where the farmer is, the geotagging of farm and the produce data. Then the provision of check-off a system for low friction repayments, and then managing the risk via automating the communication through the SMS alerts and the spoilage awareness for the insurance providers. This way, then, we see the challenges of how Angry Wallet 2 is able to build trust and deliver tangible value for farmers, especially when embedded in the local relationships. What we have experienced before and the insights from Kenya, well, implementing activities of Angry Wallet 2, we have seen the challenges that really even other solution providers have experienced before. As mentioned earlier, the low digital literacy is quite critical. And then, of course, the network and power issues that we have mentioned, because interior where the farmers are really producing their, commodities or crops or doing their farming activities, these networks are not really readily available. And then we have seen the initial mistrust in digital solutions because of particularly some of the experiences that our farmers have been having with other similar solutions. Then Angry Wallet 2 itself could be able now to offline transaction support. Initially, if it's online, then without the network, that was quite a great challenge. And then the solution of SMS-based updates for the transparency is another key area that build these trust and relationships. And then training farmers via cooperatives and doing demonstrations on their farms or proximity to where the farmers are really producing or delivering their input. We have seen this one creating quite impact on the uptick of credit, and then reliability on deliveries to the buyers, and the stronger cooperative trust. Scaling of Agri Wallet 2 to cold chain and financing, and we look into the future, the path forward, using data, finance, and cold chains. How are we going to do this? Enhancing real-time code room data can be tied to delivery quality and the finance access. For other similar, initiatives that are really coming up, this is quite a key to be able to do that. Bundle loans and insurance and logistics into one digital experience, enable then harvest prediction and performance benchmarking with the monitoring and evaluation tools. And all these then cold chain investments become safer and more inclusive. Angry Wallet 2 then isn't just about financing. It's about building a smarter, more sustainable food system from the ground up. And we have a case study, and I'm going to present it a bit from Kenya on a tomato and farmers producing in the central part of the country, where we have been able to see 150 smallholder farmers getting onboarded via local cooperatives, and then the data from the code room getting integrated into Angry Wallet. And we have seen the input on financing via checkoff based on delivery to code room increasing by around 30%. And then a reduction of the spoilage of the crop by around 20%. And then improving on the repayment that has gone up to over 95%. Imagine if every kilo of a tomato stored in a cold room or every delivery registered via mobile could help a farmer get a loan. That's the vision we are enabling. Finally, let me mention a little bit about data as finance assets and why data is the new collateral. Because so many smallholder farmers face financing barriers due to lack of traditional credit. And then, of course, traditional credit is really based on paperwork, and then where there is no data, then the farmers miss the financing. So credit data becomes now quite an asset. Then cold chain, crop and transaction data are underutilized assets when you look at it, and that's how the financing, especially for smallholder farmers, have been quite low in this region, and particularly when you're looking at the small scale production or smallholder farmers, farming activities, and globally about the significant percent of the financing that goes to that sector. So Angry Wallet 2 captures structures and monetizes these data streams. And these digital footprints enable access to credit, risk investments, and improve transparency. Thank you very much, and looking forward for your questions. Over to you, Roberta.
Thank you so much, Peter, for this interesting presentation, and thank you so much both for setting a bit the stage and giving us an overview of what are existing solutions that are relevant in around this topic, but also for then highlighting what makes AgriWallet 2.0 special. So I think I really like your tagline, when you mentioned like data is the new collateral, and I hope we can go a bit deeper into the topic also with our next speaker. So I'd like to call on stage Yuoma.
Hello, everyone.
Hello, welcome. Yuama will give us a bit of an overview from a different perspective, right? Which is the perspective of actually an investor, like somebody that is looking to understand what can we do to de-risk investments into the agri businesses. So without further ado, Yuama, please feel free to share your presentation and start. The stage is yours.
Thank you, Roberta, and thank you all for having me. So, for my work as the head of conventional finance and investments at Nassau PLC, we work with all the financial institutions in Nigeria. And what we do is to de-risk the agricultural value chain by facilitating access to finance and investments, leveraging our credit risk guarantee to build trust with lenders. So data is very, very critical to what we do in Nassau. For us in Nassau, working with the financial institutions risk is primarily about data, about information, and information is what bridges the gap. The financials need reliable data to be able to unlock credit. And so working with Nassau using data, We're able to make agribusinesses and smallholder farmers visible, measurable, and bankable. Data is very, very important because this is the bridge that connects financiers and smallholder farmers and our agribusinesses. Agric is perceived as a very risky sector. And because of the perceived high risks, which Peter mentioned to earlier, in terms of inadequate collateral, which you can agree with me that in the Nigerian context, about 80% of our smallholder farmers produce most of the food that we eat, especially the fresh foods, value vegetables, and all the other food that Nigeria eats. So it becomes very, very, very difficult for most of them who lack tangible assets. Most of them lack land titles to be able to, access finance. And being a de-risking institution, we are supposed to stimulate the flow of finance and investment across the entire agricultural value chain, including our smallholder farmers. That is actually our mandate. And you know that some of these, our smallholder farmers, they don't have proper bookkeeping, they have limited financial records, and financiers need these financial records to be able to, provide lending to our agricultural sector. So because of this weak data and of course the post-harvest losses that undermine repayment capabilities, banks that we work with, they want to be able to see that smallholder farmers, you can pay back the loans given to you. So access to finance becomes a very critical component that's supposed to boost the productivity of the sector. So because these are smallholder farmers and agribusinesses lack all this information, and also the transaction costs, of course you have the market risk, you have the weather risk, you have the price volatility. All these things contribute to lack of finance needed to support the sector. And so what we do working with financiers who need this information is we leverage data that this cold room storage provides. You agree with me that data is the new collateral. It serves as the alternative collateral that normally you would have been asking the smallholder farmers, bring your collateral. Banks cannot lend with you without collateral. And so we are looking at what other alternative collateral can we leverage on to boost lending to this underfunded sector. And that is why data is very, very important. So if you have crops stored in cold storage rooms that are solar powered, that helps to extend the shelf life of products, is very, very important. So it gives you a verified data on your crop performance. So with that data, financiers can credibly lend because they are looking at, okay, fine, I have a verifiable information on which I can base my credit on. So you can also agree with me that the horticultural value chain, which is very, very critical in providing food security in Nigeria, lacks adequate funding needed because it's predominantly dominated by our smallholder farmers. So what do we do with data? So data provided from crop output and cold storage rooms provides reliable data that financiers will not need and reduces the perceived risks for lenders, which is very key. So data bridges this gap again. Data also helps to scale inclusion. These smallholder farmers who lack the collateral and who are not really structured, plus they don't have adequate information that will help them, assess this finance. By the time you bring them in, especially through the Cultivate app or by storing those crops in the cold room, you have access to reliable data that the banks can say, okay, fine, we can capture the names, the gender, everything, the history, and repayment patterns. So this helps them to be included and improve sustainability also. Data also, you can agree with me that without data, the perceived high risk, is more. And without data also, the warning signals that this particular value chain experiences in terms of post-harvest losses that makes banks not to lend, also this makes financing difficult. But leveraging data like the Cultivate app, you're able to dictate early warning signals. You can predict, the default rate, especially when the crop stored are going bad. That code helps you. Banks need this information because the horticultural sector is underfunded because of the nature of the crops. They don't have longer shelf life. And so how are you going to lend to these people? They don't even have the collateral. You need data, and data, cold storage data, forms alternative collateral that the banks can use to be able to allow these farmers to access finance. It builds the confidence of banks and in agricultural lending so that they can expand more credits to this particular underfunded segment. Another thing that data does is in terms of credit risk assessment, you're able to use your data to manage risk. So cold room performance data helps to actually de-risk that investment. Banks can confidently price loans based on real risk level, not on the perception that the agricultural value chain is very risky. No, they are blending based on the real risk they can see, and then they are better able to make sound credit decisions. So data is what gives you the tool for smart decision making, so reducing default. So like Peter mentioned earlier, data is the new collateral. Without data, you won't have reliable information. So data gives you that visibility that financiers are looking for. Of course, you're able to trace your cash flow because repayment is about cash flow. If you're not able to see the flow of your money as a lender, as a financial institution, you are not willing to lend to the sector. But when you have reliable information stored in cold storage rooms, you can see the visibility of your cash flow, and that boosts the confidence of lenders. Okay, I can see how my money will come back, and so I'm able to lend to this particular segment. Also, it connects farmers to off-takers. What are the banks looking for? They're looking for, okay, if I facilitate finance to you, how you pay me, how are you going to pay me back? Remember, the horticultural value chain, because they are not able to store most of their products for a longer time, they can sell off most of those produce at farm gates. But bringing cold storage into the whole equation changes the dynamics. You can now see from the cold cultivate app or any data that you have that, okay, fine, this person has this storage, this volume of crops stored in cold rooms, and based on that, he has an offtake agreement. Somebody is coming to offtake, they can sell better because you're not forcing them to now sell immediately they harvest. By storing it, they can wait and be able to sell at a better price. It improves the margins of these farmers. So leveraging data helps reduce the risks inherent in the entire value chain. And this is what we do in NASAL, trying to make banks to open their books and lend to the sector. So by bringing the de-risking instrument that data helps to do, to provide, banks can confidently lend to the agricultural value chain. Smallholder farmers who are normally excluded from lending because of lack of collateral can now say, okay, fine, I have this data, and you can see it from the cold storage. I can repay my loans if I'm giving this particular amount. So data gives that confidence. So data is the bridge, is the foundation for unlocking the finance and investment needed to support the agricultural value chain. So and for us, a de-risking institution, we deal a lot. We base most of our analysis on data. If you're going to the bank to convince them, you need to be able to show them, okay, I can forecast this cash flow. I can predict when this person will repay my loan. So these are some of the tools that helps financiers, especially in Nigeria, to be able to lend. The volume of lending in Nigeria, from Nigerian Bureau of Statistics, is below 5%. And what are we trying to do, especially for the horticultural value chain? That if you check out the global contribution of this particular value chain is over $225 billion according to FAO statistics. This particular value chain needs to be funded, and traditional collateral cannot bridge this gap. And that is why data comes in from stored courage, and you use that data and you're able to catalyze the needed finance and investment needed to support the agricultural value chain. And this is very, very essential. So for us in NASA, data is the bridge. It unlocks that finance that we are looking at. So what are the things we do apart from data? Data supports the decision making that NASA does. We're a de-risking institution, and we leverage credit risk guarantee to support lending. So at the back of it, by the time you integrate data from Coldroom and you bring in a credit risk guarantee from NASAL that provides up to 75% cover for agribusinesses, financiers can willingly say, I can comfortably lend to this sector, because if anything happens, I have the data, I have the NASAL instrument, which is the credit risk guarantee. I can comfortably say, okay, my money will come back. That is what data does for NASAL, and it also helps to include our smallholder farmers. And also, you recall that smallholder farmers, they lack proper training. They are unstructured. Some of them are all scattered. Some of them don't even know the right tools and how to manage some of the crops they have stored in the cold room. So capacity building is another essential thing that helps these farmers to be able to access finance. So what do we do in NASAL as well? We build the capacities of these smallholder farmers and agribusinesses by training them on good agronomic practices. Because if you bring a training and that will enhance the yield for a smallholder farmer, with the reliable data that shows you the financial records of these smallholder farmers, you already have a transparent evidence for loan appraisal. What are financiers looking? They want to be able to price loan based on the risk. So data from cold chain storage, better training, credit risk guarantee catalyzes the affordable finance needed to transform the agricultural value chain. Thank you, Roberta.
Thank you so much, Thomas. I think it was a great overview and also a great segue into many of the sessions that are going to follow up in the afternoon. I found especially interesting how you close the session now, really highlighting, okay, there are three components. There is the data component, there is the training component, and then there is the de-risking or the credit risk guarantee component. So thank you for that. And I hope we can dive also a bit deeper into this aspect in the Q&A section. Before we go there, however, I'd like to invite on stage our third speaker, Christian Bain.
And thank you so much.
Management.
Pleasure to be here. Thank you. I had a little bit of some issues joining, but I'm glad to be here. And my greetings to your audience.
Great. Please go ahead, Christian. And we are looking forward to hear more about the concept of crop as collateral and what you have been doing in this field. Please.
Thank you so much, Roberta. First of all, like I was introduced, my name is Christian Bain. I am a Ugandan, and I've been in the business of trying to get finance and markets to smallholder farmers and exporters, traders, to access credit using their commodities as collateral. And in this context, we have been using a system called warehouse receipts. So warehouse receipting system is the anchor on which we have been able to develop credit access, risk management tools, and also access to markets for many of these traders, farmer groups, cooperatives in various value chains. I'll go straight to the next slide. Our services really involve, first of all, giving information, so training the cooperatives and farmers, the SMEs, empowering them to understand the concepts of trade, the concepts of storage, concepts of governance, how to run their businesses, and then how to leverage warehouse receipt systems and inventory control to access markets and to access finance. We also have been developing with the Uganda Commodity Exchange areas where we can use structured trading systems to get farmers and cooperatives linked to electronic warehouse receipts. In other words, where their data is captured from what they've stored, and that data can be used to trade on a commodity exchange, but that data can be used for a financial institution to make an informed decision about how to provide finance to these guys. We have also integrated a logistics component where aspects of that collateral, when it is being moved from one storage point to another, and then another, depending on where the location at which the financing was done, or which the original produce was taken, it can eventually meet the points of delivery in that condition in which it was financed. So issues of quality deterioration, issues of loss, issues of perishability and all that are addressed within the context of some of these goods and their quality attributes. So that is the design of our service proposition concerning stored commodities and how these stored commodities can be bankable in that respect, especially for the smaller scale farmers and traders who really are not in the frame that the banks are comfortable with, the risk frame. Next, I'll give you an illustration of what we are doing in terms of farmer groups accessing credit through these storage systems where the data concerning their commodities is collected, and that data is then shared with the bank, financial institution, savings and cooperative organization, microfinance, the whole cohort of interested financiers who look at this, and how it goes through until it gets to the final delivery. So in the first case, a farmer group will typically bring their harvest, avocados, rice. It can be perishable, it can be dry. We've been dealing with dry for the last 20 years, but now we are developing into perishables, into horticultural products. This is something we are developing. Obviously, the technology and the systems need to be developed further, especially in the back area, in the upcountry places. But typically, these guys bring their produce into a warehouse that has been accredited by a company like ours. Now, there are two situations that you can do this. The farmer might have a contract against which they want to deliver. So they have a contract to supply avocados to Dubai. They need financing for this, and they are using the contract and the commodity as collateral. So it typically enters a warehouse or a storage place, which has been assessed for its suitability. And then an assessment is made of this place. An assessment is made of the supply agreement. But then there's the second stage where these people don't have contracts. They need to access the markets in the first place. That is now where we have developed the Uganda Commodity Exchange linkage, where these guys' data can be collected in an accredited storage facility, accredited by the exchange on various parameters. We don't have the time to go into that, but it is a very deliberate and it is a process that is lengthy and consolidated to ensure that all the information regarding that storage point meets the standards of the industry of that value chain. Now, that information, that assessment is done by ourselves. So the farmers do not have to spend any money. They do not have to do anything concerning that. Those accredited warehouses are then made available in terms of location and all of that to the whole country. So they'll know these are the places where you can take this produce and it. Now, the information at these warehouses concerning the quantity and quality is collected again by companies like ourselves. This information is then put into a document called a warehouse receipt. That warehouse receipt is then transformed into a digital format. An electronic warehouse receipt is then created at a depository lying at the exchange. So that data flows to the exchange where it is then converted into information that various buyers in various markets can understand in terms of quality, deliverable time, location, quantity, lots, and that kind of thing. So the market attributes arising from that data is then displayed at the exchange. And this exchange has regional information centers where this information through the brokers is made available to various markets. The markets that we've seen interested in this information not only come from as far as India, Canada, Europe, but also regionally in the DRC, Tanzania, and Rwanda. We have a lot of interest in this information now. When this product is placed in these warehouses, the farmers can do two things with that electronic warehouse receipt data. They can put it on the market for the buyers, as I've just explained, but they can also take this information and take it to a bank, a financial institution that has developed an inventory-backed warehouse receipt financing system. So this information is then captured by the bank. It is confirmed by the exchange and ourselves through that documentation, and that information is then used to generate or create a credit facility for the bank, for the farmers. Now, the farmers can do two things. They can make a payment to their members if it's a cooperative. They make a first payment based on the money that they've got, facility, typically 80% of the value. Now, the value of that stock can be obtained by the contract in the first place. And in the absence of the contract, the market information, the price information that the exchange generates for that particular quality, that particular product. And it's benchmarked on markets in Johannesburg, in other places where these commodities are traded. When this information is obtained and the farmers are paid, they can then wait until the market improves, because typically we see that these interventions happen at the harvest when the prices are lowest and when everybody is harvesting, and typically the price will appreciate 2-3 months out of the season. So 3-4 months down the road, if the goods are held in these places where the quality can be maintained, you then have opportunities for farmers to trade their commodity at these prices. Now, when the commodity is traded, the proceeds go directly to the bank. One thing that happens during the pledging process of that electronic receipt as collateral to a bank is that the receipt is encumbered and removed from the trading process. However, the farmers are still allowed to look for markets through their brokers. And these brokers are typically the warehouse operators where their commodity is stored. All these costs relating to the storage, transportation, management, handling are taken care of at the warehouse and are paid at the time that the farmers sell their produce. So the farmers do not have to provide any cash outlay at the outset, but these costs, obviously there will be some, will be offset when the produce is finally sold. But at the end of the day, the farmers will be able to get a second payment when they sell their crop finally at the price that they find conducive. And this second payment is after the one that they'll have got when the bank paid them the loan amount. So typically when they sell, the encumbrance is removed, the commodity is allowed to be traded, the title passes to the new buyer, the buyer pays into the bank, the loan amount is expunged, and then the buyer can then go and pick the produce from the warehouse on instruction by the exchange. In situations where you don't have an exchange, the bank then provides release instructions to collateral managers like ourselves to do the eventual release. So that is the environment, that is the illustration on how this works. It is slightly technical, and we could go on and on about various aspects of this transaction, but we've seen that it has worked for various value chains. It has worked for farmers who are doing dries, the grains and the sim, and it has also worked for those who are doing fish, who are doing frozen chicken, who are doing the tomatoes, avocados, herbs, spices, all this, even though many of them do not wait because of the perishable nature. The fact that they can come and put their avocados, some even for 2-3 days, the timing. Pick the avocados in a place like Western Uganda, it is immediately confirmed, the suppliers are paid, the goods are then moved under our logistical umbrella, in cold storage facilities, to a packing house where they are packed, still under management. Data is fed to both the buyers and the bank, the Ministry of Agriculture that provides the final phytosanitary certifications and all that is flawless until we put the produce on a plane or on containerized boxes for rail and eventually marine transportation. So I'll just go to the next slide to give you a picture of what a typical warehouse for dry commodities looks like. And these are farmers. Recently, we're training them and showing them what the storage facilities look like, the conditions in which their produce is going to be stored. On pallets, we do the bagging, the warehouse has to be lit, the floor has to have a certain condition because certain products pick orders from the ground. And this is to bring them up to speed on what they can expect. And the banks are also involved in this process. So it is important to note that the farmers retain title in their goods, even though it has been pledged or it is being held by a facility that they do not own. The legal system which regulates this process recognizes and protects their interest in these goods under these storage conditions, and the data that is derived from the information about their crops. The next is I think, Roberta, I probably have given you the module. The next is the risks. The risks involved in this process. There are risks that the banks face, the farmers also face, and we categorize them for purposes of time in two specialized risk areas or risk components. The first risk component is the process risk. These are risks arising from the underlying commodity, the conditions of the storage facility, the processes, the management processes that underlie the storage facility. How are these products handled? The delivery systems. So the examples I have given here is, for instance, where financing is provided on a pre-finance basis to a farmer group to go and pick produce from the members against a contract, for instance, an LPO or something like that. And the farmers do not bring the crop. So non-deposit of stock. These are some of the issues that would arise. And the banks are saying, no, we are going to finance based on the information confirmed the produce in a warehouse. So produce in a warehouse, storage facility, cold room, confirmed by an independent party, they will finance against that. So no pre-financing. So a mitigation arising from this process of warehouse visiting addresses the issue of at what point does financing pass and what do the farmers have to produce as data against which financing can be provided. You can have the facilities, you can have the financing, but if the produce that the farmers are bringing is substandard, it is perishable, and there is no provision for understanding the perishability and the condition of these goods, then you are going to have a problem. So the risk of substandard quality, the risk of people, farmers bringing in deposits of produce that have issues. So when the financing is done and there are underlying issues relating to that commodity, you are bound to have a problem. Warehouse receipts that are issued fraudulently, where you have parties such as ourselves in this business colluding with farmers or traders to issue warehouse receipts and data against which financing is provided, that's a big problem. So these process risks are largely mitigated through the module that I've explained. So quality, warehouse condition, storage management, data reliability, authorized delivery, all that is addressed through this process. You also have the business risk.
Christian?
Yes, please.
Because we are over time and we would like to leave some space for the Q&A, can you maybe wrap up? I think it would be interesting for the audience if you could spend one last minute talking about the insurance aspect, which I know is critical. Yeah. That would be great.
About it. Sometimes when you get into this, you go on and you will forgive me. So
I think we all understand it.
Yeah.
No worries.
So a critical mitigation factor in this process is the fact that this whole enterprise is insured, not only for the process side, where I have insurance for the warehouses, insurance for the equipment, insurance for fire, burglary, deterioration, and all that, but you also have insurance for the service providers who are providing the information relating to this. So we have a professional indemnity cover that covers fraudulent issuance, for instance, of a warehouse receipt, fraudulent misrepresentation of data against which financing is made, or which buyers rely on to take the avocados or the tomatoes. This insurance is not a broad cover covering all our, it is customized to every single operation. So every single storage facility, every single operation that we do has its own insurance and its own attributes that require risk analysis and mitigation in that respect. So I thank you for listening to me. And I'll take any questions or clarifications. Thank you so much, Roberta.
Thank you so much, Christian, for guiding us through the process and also for already addressing some of the that are coming in the Q&A. Actually, there were quite a few questions around, which type of crops or which type of commodities can go through this model. What do you do with perishables? So it's great that you already addressed some of these questions. I would like to bring back all the panelists to just have a quick round of Q&A. We do have a few incoming questions. Feel free to also add more in the Q&A chat. One question that I would have to you, Oma, to continue on this idea of which commodities are we actually talking about, is related to the credit risk guarantee that you were presenting, and I would just be curious to understand what are the segments, value chains, and the commodities that are covered by the credit risk guarantee that NIRSA is offering.
Thank you, Roberta. So for the credit risk guarantee, it covers all the segments of the agricultural value chain from production down to the export market. So the entire value chain is covered. So if you're into primary production, you you qualify for the credit risk guarantee. If you're into the logistics space, you qualify. If you're into cold storage systems, you qualify for the credit risk guarantee. If you're into the export market, you qualify. So across the entire value chain, we can provide up to 75% credit risk guarantee. That what that means is that we're able to share it with financial institutions who would typically who perceive the agricultural value chain as very risky. So we coming from a value chain fixing approach where we cover from pre-processing down to the export markets. We provide this credit guarantee, share risks with banks, and build the confidence of the banks to catalyze more finance for the segments. So it's all across the entire value chain. So you have your tomatoes, you have your cucumbers, you have all your fresh fruits and vegetable value chain. So it's all covered. For people deploying cold chain logistics, so long as it's tied to the agricultural value chain, because we are specialized in de-risking. So, and our own is just for agricultural value chain we cover. So our smallholder farmers are qualified, our agribusinesses are qualified, end-to-end coverage. So we're happy to bear the guarantee. Thank you.
Yeah. I know almost we how to get a clear overview of what are digital solutions that are available. My question would be directed towards if there was one single, like, concrete next step that we could be doing to make sure that the farmer credit access becomes easier and more affordable, what do you think that should be? Peter, I don't know if you got my question, whether I should repeat.
It's like I didn't get your question there, Roberta. Sorry for that.
No, no worries. I'll say it one more time. I know that there was some background noise. My question is, knowing like your experience with looking and testing different types of digital solution, could you name for us what do you think would be a next concrete sort of next step or ingredient that would be needed to make farmers credit more affordable and easier to access? What is the the missing link, if you want?
Thank you so much, Roberta. Initially, it was not very clear. Thank you so much for that question. And indeed, the ingredients first that are needed, for the farmers to make them really access financing. They include, what we really mentioned when the value chain is integrated, and especially when farmers are able to, first of all, get registered digitally, and the information is captured. That's a personal information from the farm level that is enabling visibility and traceability. The second aspect is that we need to have the core transactions that go through both online and offline systems. That one ensures the usability of that kind of data. And maybe finally, what really is needed is to have a, that connection of particularly the input providers through real-time stock and pricing of that data, so that make sales can be done through the check-off system or through the e-voucher system, reducing the cash bottlenecks that come with the traditional paperwork. And essentially, when we have this, then we enable more finance flow to the farmers through the summary of two areas, that is credit or advances that are automatically calculated based on the verified data, ensuring fair and secure pre-financing, if I may say that. And this is coupled through the check-off system, reducing the risk. And then secondary, what I mentioned about the e-vouchers that allow targeted, transparent subsidy and cash and back programs for the inputs. And this information then is transmitted through SMS-based system, making it accessible to the low-tech users. I think if I got your question correct, Roberta, this is what is needed to enhance, farmers able to assess, financing based on the data. Thank you. And over to you.
Absolutely. Thank you so much as well for highlighting the importance of also using an inclusive approach in which we really think about smallholder farmers who might be offline most of the time, and how can we design solutions that also cover for these use cases. I would have a lot more questions, but unfortunately we are at time. And so I would like to wrap up. I'd like to really thank our panelists for the contributions, all the attendees for your engagement and the questions. And I can only say that this topic of data for credit access and risk management is definitely something that it's a strong core interest of your BCCA right now. So we'd really love to continue the conversation on the topic in the afternoon, in the next sessions, and also beyond. And so if you'd like to contribute, I would encourage you to contact us at info@yourbcca.org. And also, I would encourage you to stay connected with our updates and what happens in these initiatives as we move forward. And for that, you can register and sign up for the base newsletter. And of course, the journey of today, it's strongly linked to the different pillars that you have covered in the onboarding kit. So this is just a reminder to also explore it after the end of this day, to also find more of the resources that we have designed. Now, I will like to mention that upcoming, there are 2 sessions. So the summit is going to split in 2 parallel sessions. Here in the live stream, you're going to have session 8, which is the innovation arena, which is basically an opportunity for cutting-edge cooling startups to pitch their idea and showcase their innovation. And in parallel, we have session 7, which focuses on passive cooling. And to join session 7, what you should do is that you can scroll to the bottom of this page. You will see that there is a links session, and you can click on the link for session 7 to be directed to the platform where that is going to be streamed. And in that session, we are going to look at experiences from the ground on implementing passive cooling across Africa, and understanding what are key learnings from this implementation process, and also what are strategies for engaging communities in building passive coolers. Thank you so much. I'll hand over to Emma, who's going to be moderating the innovation arena here in the live stream. Thank you.